Big Sec news today. Spot crypto ETFs ease. Regulation is shifting. Crypto market reacts. What does this mean? For Solana investors, for XRP holders too, for Bitcoin traders, for Ethereum fans. Let's break it down. Spot ETFs explained. They track real assets. But for crypto coins, before heavy rules, now simplified path. Exchanges get relief. Listing gets easier. Less red tape ahead. Crypto gains trust. Wall Street watching. Institutional money. Flood may begin now. XRP price reaction. Solana surges fast. Bitcoin eyes new highs. Ethereum feels lift. But wait, what's next? Why did SEC change? Pressure from market. Crypto adoption rises. Global rules shifting. Other nations act. SEC must keep up. Investors demanded. Funds wanted access. Now doors are open. Crypto legitimacy grows. Still risks remain. Fraud still possible. Volatility stays high. But rules improve. Confidence rising. Mainstream closer now. Banking sector alert. DeFi competition. What about Solana? XRP. Roll ahead. Future looks bigger. This is Banking 2.0. New money era ahead. Stay tuned today. The SEC just shifted the crypto game. Spot ETF approvals are now smoother. This could boost Solana and XRP. Bitcoin too may benefit long-term. Institutional players now interested. Simpler listings mean faster launches. Funds can move quicker into crypto. This is a bullish sign for adoption. Crypto ETFs attract mainstream money. Investors trust regulation more now. XRP's case for utility gets stronger. Solana's network may see inflows. Ethereum ETFs could grow in volume. The change signals U.S. policy shift. Global investors are watching closely. Other regulators may follow this move. 2025 could be the year of ETFs. Wall Street giants eye partnerships. Banks may integrate crypto faster. Confidence boosts overall market cap. More liquidity means less volatility. But scams and risks still remain. Education is vital for new investors. Crypto firms may innovate further. DeFi may merge with traditional finance. XRP, bridges, banks, and blockchain. Solana powers high-speed solutions. Ethereum remains DeFi's backbone. SEC's move could change everything. The crypto era is accelerating now. The SEC's decision to simplify spot crypto ETF listings marks a pivotal moment for digital assets, lowering barriers and potentially unleashing a wave of institutional investment into crypto. For Solana, easier ETF rules could bring massive liquidity inflows, boosting adoption of its high-speed blockchain for payments, DeFi, and gaming applications across the global financial system. XRP stands to benefit strongly as well, since its narrative of bridging banks and blockchain payments fits neatly into regulated products, drawing new investor confidence and larger-scale usage. Bitcoin and Ethereum ETFs are already popular, but reduced hurdles mean more products can launch, expanding access for investors who prefer regulated instruments instead of direct crypto exposure. Institutional demand has been rising steadily, and Wall Street giants have long been lobbying for clearer rules. This SEC shift shows crypto is no longer fringe, but part of mainstream finance. Global regulators are also watching the US closely, and this move may spark similar reforms in Europe and Asia, pushing blockchain adoption and making crypto markets more interconnected worldwide. Still, risks remain. Crypto markets are volatile. Scams persist, and investors need education. ETFs won't erase risk, but they add oversight, which builds credibility compared to unregulated exchanges. This policy change also highlights a competition between centralized finance and DeFi. With ETFs entering, the traditional financial system embraces blockchain instead of resisting its disruption. 2025 could be remembered as the year when crypto ETFs became the norm, legitimizing digital assets, accelerating adoption, and transforming the way investors and institutions view blockchain finance. Solana may position itself as the blockchain for high-frequency trading, payments, and financial apps once institutional ETF money flows into crypto-backed projects with proven speed and stability. XRP could finally achieve its vision as a true bridge currency for banks and financial institutions, now backed by ETFs that give legitimacy, liquidity, and global recognition to Ripple's ecosystem. Ethereum remains at the heart of DeFi, and with ETFs simplifying access, investors who avoided direct crypto ownership may pour billions into ETH through regulated Wall Street instruments. Retail investors also benefit, as ETFs make crypto exposure easier to add in retirement funds, investment accounts, and even banking products that never previously allowed blockchain assets. Wall Street, which once dismissed crypto as a fad, is now embracing it fully through ETFs, signaling that blockchain-based assets have crossed from speculation to long-term financial innovation. Governments may compete for leadership by offering friendlier crypto ETF regulations, creating a race to attract capital, fintech innovation, and blockchain companies to their jurisdictions. This SEC ruling could spark new global partnerships between banks, exchanges, and blockchain firms, creating hybrid systems where crypto and traditional finance finally work side by side. In the long term, ETFs may even pave the way for central bank digital currencies, CBDCs, to coexist with decentralized assets, giving investors a spectrum of regulated and unregulated choices. The bottom line, crypto ETFs are here to stay, and with SEC rules easing, Solana, XRP, Bitcoin, and Ethereum could see explosive growth in 2025 as institutional and retail adoption accelerates together.